Alright, so I believe that I'm streaming right now. Let me just see if the audio goes through and everything is right. Just get me closer to my laptop eventually. And then nope. Let me just see if this goes through. If the other goes through right. Nope. Alright, so the audio goes up right, but it's hella strong. I need to deschedule this one. Sort by live. How do I delete this one? Alright, whatever. Let me just share this with my Telegram channel as well, and then I'm gonna get into the study in itself. Alright. So, before we begin, I just want to drink some water. Starting off with on our right foot, being hydrated. But I just want to quickly tell you what my bias is for today and what my analysis indicates and what I would want to see from price on this Friday of non-farm payroll. So, based on this is what I have written down in my physical journal, so this is what I'm going to talk about. Based on my assumption that the market is in the midst of a getting ready stage for the quarterly shift, which is just this does not matter really, but I believe the market will entice every single breakout trader that wants to go long. I believe that the market, let me just show this to you. I believe that the market will eventually spool up higher above these highs in the NFP. I mean, these highs are going to be taken today, right? Let me just take the journal off and let me just explain this to you in my words, because why not? So, what I expect from the market is this candle right here, in which we're trading in. This is the daily chart. Based on my weekly assumption that we've came back into this main threshold of the weekly bullish short block, and we quickly rejected it, trading above and closing into this opening price. Next day, the market went into the 25 or 75% of this wick. The market went again into this daily busy. Then we rejected it. This right here is a sign of strength within a weekly bullish perspective. The market then closed above this daily SIBI plus above this 4-hour refined Reaper, which we're going to see on a 4-hour chart. But nothing here really matters without the already pre-existing bias. So there's nothing out here that I'm looking for in terms of a signature without my bias to the upside, because everything is relative to the bias. So first things first, I'm going to try and identify a bias. Then I'm going to justify why I am going to look for that bias and what do I want to see in price. So first of all, I want to see the direction. Now, everything that I've talked about here, these are signatures in price. I saw this closing above. Therefore, I would prefer for the market to not go back into this daily SIBI. I'm not saying that the market has currently made the low because we have NFE in 10 minutes. I'm not saying that. I'm saying that I would prefer, it is not 100%, I would prefer for the market to leave this inefficiency open, because this would be framed as a balanced price range. So this candle's low right here, I would like to see this stay, this up close candle right here. I would like to see this not being digging through more, and for this to create an inefficiency. But essentially there's a lot of things here. But I would like for this daily candle to expand higher up until this level that I have here. And if we close above this, then I would prefer for the market to go into this, and this would be my target, my macro perspective target. But eventually, what I would want to see only from this day is a run above these highs. And let me just, a standard deviation here, okay. And basically this, so let me just put this into my chart. And you can see how this minus 1.5 level is basically, or even the exact level, the 50% between this level here and this level here. You can see how this is literally the 50%. So in an expansion higher with speed, or within an expansion to the upside, a continued expansion to the upside, this level right here, this can be framed as a high probability level if we're indeed going to continue. But I'm not trying to predict the high inside of the Nasdaq, but because I'm never trying to predict highs in an all-time high setting, because this is what everybody's trying to do. Everybody's going to try and sell the all-time high, and then for the stock market crash and all that bullshit. So I'm not going to try and do that. No, I'm not going to try and think like every single retail trader. So this is, I mean, I'm a retail trader, but I'm not thinking like the retail traders are. -1 standard deviation. Let me just write down daily standard deviation. -1.5 standard deviation. Right. So these are the levels that I believe that the market is going to attack today. What I also observed in the daily chart was this opening higher, this volume imbalance opening higher above this level, this dashed level that I have on my daily chart. This indicates within my bullish bias, again, a sign of strength. And I know for a fact that these highs are going to be blown through. So I would want to see an explosive candle to the upside for this day. Now, for the 4-hour chart, what we saw here was the market create this relative equal hose. Wow. These relative equal lows here. I wanted to say that these are going to stay in. Most ICD traders, when they see this, they're going to rush and try and annotate, oh my god, relative equal lows, therefore they're going to get blown out. And some traders would try and short this fair value gap and then onto this relative equal lows. and then they're gonna get absolutely crushed. Let me tell you why. Because these relative equal these relative equal lows here, they are made with the purpose. We repriced back to this 50% of the weekly order block with a reason. I would not expect the market to go below this based on my higher time frame analysis. So do you see how the top down analysis is the most important thing when it comes to your bias, when it comes to your narrative on a lower time frame chart? So why do these lows stay in price? That is the exact reason why. We saw the market trading above that BISI, market going back 50% of this order block, plus these order blocks here, plus the consequent encroachment of this tail being utilized as a means of support. 50% of this wick, we saw the market open right at the 50%, going back below it, using this inversion gap or the 50% of this as a means of support. Market went above this high, trading in a premium from this low to this high. We're trading in a premium. Market went back into this fair value gap here with this big wick, and we can absolutely just see this current 4-hour candle, because this is where I was trying to get at. We can absolutely just see this 4-hour candle crush the market below for this inefficiency. But within my current bias to the upside, we can also see the market just spool higher up until these levels. That would be my scenario for this NFP. But I would prefer somehow for the market to firstly attack the sell side so I can get some long positions in within the AM. So basically the manipulation being done here on the NFP. This is what I would like to see. On a 4-hour chart, you can see this inversion gap. We closed above it. Look at the bodies of the candles. We went into this inefficiency. True, but look at the bodies. Here, market trades above this 4-hour Reaper. Here, or this inversion fair value gap. We can use it as a means of support. And then ultimately price getting launched above. But again, I would want to see the market attack sell side during the NFP. Now, this does not mean that you're gonna take a short position into sell side. This does not mean anything in terms of live trading with live funds. I never ever entice you to trade based on my ideas with live money. Okay, that had to be said. 1-hour chart. Relative equal highs, which are absolutely obvious. People, and this is also the London session buy side. So this correlates in a beautiful analysis. A swing low being taken here. Now we're trading within a premium. Do we have to go back into a discount? Well, the NFP can absolutely just do that. There is no problem in that. However, I would prefer for the market to stay within this range and just pull higher. But we can also go below this, and this would not cancel out my analysis. This would not cancel out these relative equal highs staying in the price action and actually being attacked. This would just mean that the market just went below a level of sell side. That's it. So I'm seeing this swing low being taken as a level of sell side being taken. I'm looking at this consequent encroachment of this wick, of this tail on a 1-hour chart, and let's see what happens during the NFP. So we have this level of buy side, which is pretty obvious. This wick here, which I do not want to see the market trade into, but we can absolutely see the market trade below for this inefficiency. I am not surprised if that happens. And perhaps we can utilize the 50% of this tail for a run higher up into this buy side. But this is my primary target. But again, do not take this as trade advice. Do not take this as a means of trade. And now let's just look at the NFP. So the liquidity pools that we have currently sitting is this low and these highs. We're currently trading near the New York midnight opening price. Why do I care about that? Because that is, we just went below it, making a perhaps significant low into this new day opening gap here. But when I have this New York midnight opening price here, imagine this. This is what I did for my study. Imagine this here, this opening price as the daily candle. We went below it. So this accumulation, manipulation, distribution part, the power of three, that is the most important concept in my trading. So when you see me doing those executions upon a 1 minute chart, everything is based upon every single thing that I've talked about here. So with all that said, we have 1 minute until the NFP. And if the market blows through these highs, then the market should not come back into this range. But the NFP is open to manual intervention, so anything can happen. One button can be pushed and the opposite liquidity for 200 points can be reached in 1 second. 7 seconds. And let's see. I'm looking at that CB right now. See how we trade inside that? We traded a little bit above the Sunday opening price, which is there to frame the weekly power of three. So this is why I have that level on my chart. And we just blown through those relative equal highs while taking the sell side first, while not going below that wick. So that was a beautiful anticipation, but you can see that it does not mean anything, because I would never take a position inside the NFP, no matter how obvious that liquidity pool is or how obvious my narrative is. Now what I'm gonna do with you live is I'm gonna wait for the actual 9:30 opening. So we have tons of time left within the current trading session, within the live session, but essentially, I'm not going to take any trade in this live stream. I'm never gonna take any trade with you, because that would be an enticement for you to take a trade with me. Even though I say this 100 times, you can still take a trade. Like, I cannot control you, so therefore I'm not gonna say, oh, I'm gonna buy here live. But I'm gonna study price, and I'm gonna show you the perspective I have when I do all my executions. So the market took all these relative equal highs. Let me watch the S&P. What did I press? 15. Market created, went below the sell side. S&P. US 30. Absolutely ugly price action. But looking at the daily chart of the Dow, this is not looking good in terms of bullishness. When we're comparing the Dow with the S&P and the Nasdaq, they're decorrelated. Let me just peek at the 4-hour chart. So I was telling you about that consequent encroachment of the tail, or the 50%, went to the 75%, and then rallied away from it into the relative equal highs on a daily chart. But I cannot tell you much from this current price action range that we're trading in currently. And also, one thing that we can talk about while we get to the 9:30 opening is that every single thing I say during this live stream, or every single thing I say within my following trade breakdowns or my breakdowns or my studies, every single thing I say is based on my perspective. It is based on my experience. I'm going to tell you 100%, like the 100% truth of how I am within my trading, what I've studied, what I've learned from my mistakes, because this is what documenting means. So I'm going to document my whole journey, and it's going to be absolutely fun. And I'm also going to help you guys that are watching, and if you're new here, welcome. But essentially I'm going to document, like I did for the last year. I'm going to live stream my sessions. I'm going to talk mostly about the problems when it comes to trading, when it comes to being a sole trader, and impatience and all those problems, because everybody likes to talk about the good side of trading. And I'm going to talk about that too, but essentially I want to put the emphasis on the struggles, because people do not see that and they think that they're normal. They think they're not normal. So I believe you guys will benefit more from that than me just flashing out things. And also trading and discussing about things live, like the analysis that I've did, how I internalize price action. Because when I was doing this YouTube thing, and when I was doing Instagram and all that stuff consistently last year, when I was doing that, I've got tons of requests when it came to live streams. And everybody was asking me, how do you predict price? And this is not arrogance. This is like literal questions that I've got. This is exactly how. I'm going to tell you within these live streams and within the studies that I'm going to share with you. Like, and then one more thing that's going to come when I'm going to post all these studies that I do is like, oh, but this is after the fact. This is just after the fact. This is just hindsight. Well, of course it's hindsight. It's a study. But these studies, they help me predict price like you see me do. And like you've seen me do throughout the whole 2023 and in how you see me do now. So I'm literally just answering the questions. But enough with that. And I've said this in Romanian. I don't know if somebody is watching me anymore from the English part of my trading channel. But I've had a period in which I was very consistent with English, with speaking English and doing live streams and doing all this in English, and then I switched to Romanian, and then I switched back to English, and then I switched back to Romanian because I was trying to desperately try and do content for Romanian people. But that's just, I don't want to do that. Because I'm far better in English. And switching all of my knowledge in Romanian, that is just literal struggle, which I do not need to inquire. So while the chart is trading and we are waiting for the AM session to open at 9:30, I figured out I would discuss this for my older subscribers. But if you're new, go check out the things that I've did during the past year. I believe that I'm gonna put back the live streams that I did last year because I was literally just predicting price as well. But what I want the old people, my old subscribers, to know is that I'm not the same person that I used to be. Like, talking from a trading perspective, talking from a humanistic perspective, like me, I'm not the same. I've changed a lot for the past 3 to 4 to 5 months in which I did not post a lot. And I'm going to share with you every single thing that I've learned. I'm going to share with you every single thing that I went through. And this consistency on YouTube. I know I've said this before, but it's really here and it's back. Let me just watch the S&P 15. We have a level of sell side being taken, but I believe that was taken too shallowly. So I'm not doing anything yet. I'm gonna switch to the 1M just for the sake of trying to interpret and get a closer look on the lower time frame. So looking at this price action, the market has just rallied to the upside ever since the 8:30 NFP movement. So people, I believe they're gonna try and be long. So perhaps the market would want to attack first before the AM session or during the AM session opening. Perhaps the market is going to try and attack all these people that are in the right direction. So they just say they're long. When long are gonna break out. I believe the market can attack these people, and that would result in lower prices first. But my bias for this day, remember, that's explosive bullishness. And when I say explosive, I want to emphasize that word, explosive. Like a big range for today. If my idea is indeed correct, because I can absolutely be wrong. And that is fine. Because I could be, as you saw, I was incorrect. I was correct, but I'm profitable. And not unprofitable in terms of a losing trade. It's like I was correct. I was within the current narrative, but I'm not gonna trade during the NFB, right? So I could not take any trade. So I did not profit from that trade, but nor I did not lose. But I want to put the emphasis on how you can be correct and not profitable, or stay on a break even and not do anything, or you can be absolutely incorrect. So let's just say I think that the market is going to go explosive to the upside. I'm going to take long. I'm going to take profits out of the market and close my position, and then the market just reverses. I was quote unquote incorrect within that narrative, but I got profitable. So is that a loss? These things might be boring or might seem boring, but these were the literal impediments that I had to go through, and I had to fight. And I still perhaps sometimes have to fight because I'm trying to be correct. And in a day in which I make money, I would be mad because I was incorrect within my narrative or bias or something like this. So I'm still wrestling with all these things sometimes, but as a trader, I believe that it is very important for you to learn and to evolve. And evolving means being far worse than your future self. So I'm being fine. I'm fine with that position. As long as I know that I'm gonna eventually get there. Right now I'm looking at how we treat this fair value gap here. I'm not heavily opinionated right now about what the marketplace is gonna do. Let me just remove all this noise, quote unquote noise. Okay. Market went to the 75% of that wick, while also going to the 50% of that, if I'm not mistaken. We fell short of that. That was on a 4-hour. Okay. One liquidity point that might seem obvious would be these lows here. But I don't believe that the market is going to do something with this. I believe that these lows are going to be here in the market. And they're going to be attacked next week. So today I believe that the explosive bullishness would still be in place. I would not want to see this inefficiency now. And that would be it for this time frame. Okay. 6. $15-minute chart. Is this the line? No. S&P. A more significant rally on the S&P. At least this is what it looks like. $8.50, 910 macro. Let's just see what happens within this. I'm looking at this fair value gap, see how we treat it right now. I don't believe it created a high. I just want to read how the market treats this fair value gap here. I'm going to make it white, just so I stay out of an opinionated perspective. If the market is going to go up, I would not like to see the price coming back into this inversion gap for a short term run on buy side like this, these highs. I have no business in this time frame yet, so I must go back to my time frame. And let's see if the market wants to spool up into that 18401.5. And this opening range gap settlement, if we open higher at the 9:30 opening, what I would want to see within the next week, or I mean, if I want to see the levels of sell side taking during the latter part of the next week or the first part of the next week, if I want to see that, then I would love to see this opening range gap, which will form at the 9:30 opening. I would love to see that being left open and just a big rally here on Friday. Let's go back to the 4 hour. Relative equal highs being left here, 1 minute chart. Same thing within the ES. I'm looking at this BC, see if it wants to go below it. In a bullish narrative, I would not like to see the market go below it, and this would just become a reclaimed fair value gap. Let me see. Just higher this one. Standard deviations would be this. Minus 0.5, minus 1. within the next two candles based on how fast we're trading. We're gonna see whether the market is going to take that 181401.5 or if it's going to stay within this consolidated range. But basically, if we're gonna see speed, I believe that the market will eventually spool and never come below these lows here, or below this low rather. But again, I don't have any skin, quote unquote, in the race yet, or in the game, so I'm not talking from a very opinionated or I want to see this or else. No, I'm just literally trying to predict and anticipate and read price without any trade being taken. Let's see what happens here. When I'm one-sided, that is when I'm going to say, I want to see the price do this. I want to see the price do that. That's the only time in which I'm going to say, oh, okay, I'm opinionated now. In order for the market to go here, I would like to see this signature in price. The market is currently trading in a busy, but this is a very narrow range here, and it looks like the market would just create a quote unquote bull flag. That would be a market maker trap. I'm also looking at this volume balance here. See if the market wants to trade. How the market wants to react from it. %of the order block. If we see the market take this high in a bullish perspective, they would want to see this big up close candle here, taking on these highs now. The order block that I was talking about was this one, and also these two candles. Right now, I would not like to see any retracements back below this range before we get into this level. And I would like to see the market spool aggressively higher. And these lows to be made to stay like this. But I'm still waiting for that 9:30 opening for a heavily opinionated opinion. Heavily opinionated opinion. Or bias or narrative or whatever. Just take this. Let's go back to the 15. And let me just use this as a bathroom break. So let me just close this. All right, it's 9:07. See what the market wants to do. And I also wanted to talk about, I mean, I thought about this in the bathroom, literally, but let me just delete this. But there's one particular subject that I wanted to talk about because that was a big struggling point for me in the beginning, and that was a big struggling point for me as I was developing. And I'm still a developing trader, but essentially what I wanted to say is a big struggling point for me during the last year was I would get my narrative, I would get my bias and everything. But what I would do is I would impulsively just switch too quickly to a 1 minute chart. And what that does when you know all these signatures in price and when you know everything, like all this complex stuff, what that does is it makes you think that you're seeing things within your bias. So this is why I told you guys, I'm not going to stay on a 1 minute chart right now. Let's just switch back to a 15 currently. Because seeing things from a higher time frame perspective, understanding that the market delivers price on a top down approach. So everything happens for the higher time frame. Essentially that yearly candle is building. So when we're trading currently on a 15, we're looking at the price on a 15-minute chart. The price is currently trading at 18,328. Let's just say this price. This is the exact same price that you're going to see when you pull up a 12-month chart, or a yearly chart, or a monthly chart. So the market is not only developing on a 15-minute chart, the market is developing and trading on a higher time frame chart at the same pace. This is a very important step that I've took within my trading, and it has unlocked a lot of knowledge that I've studied personally. A lot of knowledge about when the price is going to do certain things, when the price is going to consolidate. It is all about the when. It is all about the time, because the market only runs on time and liquidity and inefficiency. But the first thing is time. Because as humans, we are prone to not be patient. We are prone to impatience, and we're prone to be greedy or to fear. The market absolutely capitalizes on sentiment and fear in a specific time. And that is the first thing, time. That is what I've learned across my whole, my whole last 6 months, let's just say. A lot of study went into this, this is I know this perhaps might not mean much to you, but if you genuinely take every single thing I've said, word for word, that is literally the market. Like, the market only runs for previous sentiment at a specific time, or to attack liquidity, or to make the market efficient. I'm also looking at this quote unquote mitigation block. See how we trade into it? But basically, if you're gonna trade above it now, we're gonna trade explosively into this 15-minute candle or the next one. So if we're gonna indeed trade higher, I would not like to see the price go below this 15-minute low. Therefore, if I believe that this low has been created and the market will not go above it, therefore I'm gonna go back to a 1-minute chart and look at the market from this perspective. But we'll see. Because I'm not trying to be heavily opinionated, but I'm trying to show you. And I'm trying to demonstrate what I was talking about. So this insight right here, let's just say that the market was about to trade up. I'm going to look at this 15-minute chart, and I'm going to see, okay, within the next candle opening, I want to see the market take on the previous 15-minute candle low, go into this inefficiency, and based on some signature here, I would not like to see price here. Therefore, I'm going to go into the 1-minute chart thinking and knowing that the market does not have to go here. I only want to see this low being taken or this low not being taken. I'm going to go into the 1-minute chart with that premise in mind, attacking this level of buy side. Now, everything that I've said here can mean nothing. But for the people that truly understand these things, and they study, this means a lot. And this comes with experience. Like, how do you know that the market is not going to go here? Just for example, I'm not saying that the market cannot go there. Based on experience and based on signatures and based on studies. And if you think that I speak only to speak, just look at the executions that I do. That is exactly what I'm utilizing within those executions or those readings of price. Let's see the S&P. Bunch of relative equal highs along with the market maker or perhaps trap of a bullish. What did I do? 1M 15. Perhaps these highs are gonna be intact for the AM session opening. So I'm not trying to get anything in terms of a opinionated trade or tape reading before the session. 8:59.10. Let's see. This is that Sibi Abyssi. Trading to the consequent encroachment of this gap. Let me just take this off. Let's leave it on. Let's put on. This, we're trading in the consequent encroachment. Also trading into this order block 50% and into this 1 minute busy. Let's see if the market wants to trade above this inverted gap. Okay, 15 again. 10 more minutes until the 9:30 opening. All right. Let me just peek again at that 4 hour. Small range. Daily. I would prefer for the market to not go below the current low that has been made. That's a good insight. So I would prefer for this to be the low of the day. However, if that is not the case, then that is not the case. But I would prefer for the market to leave this as the low of the day. On a 1 hour chart, where trading is like this, you can call it the breaker because you have a high, low, higher high. I mean, we have a low, high, lower, low. I meant low, high, lower, low. Market goes high. This can be taken as a breaker, but we're not trading within a reversal, so the market can go even lower beyond that. The market can go beyond that. There's clear and obvious not buy side, but rather sell side below the market, but I would have preferred for that to be left for the next week's trading. Then I still prefer that, but let me just erase this. Okay. So the market shallowly took this buy side. I don't think that this run on buy side is significant enough for a long-term reversal below for this inefficiency, for this here, and eventually for these lows up below this inefficiency. So within the current 930 run, we can seek some intraday volatility models or setups or ideas, because I'm not taking any trade during this live. I can look at some intraday volatility, small scalps, if we do not get that big run that I'm expecting. But again, these levels of sell side, I would prefer for the market to leave them for the next week's trading. So the next 4 hour candle, what I would want to see it do is expand higher. But firstly, I want to see a manipulation, perhaps into the consequent encroachment of this tail that we've currently created, and we're in the creation of. Might come back into it. and then seeking the previous 4-hour high, and then the buy side, making a big range to the upside. Now that is what I'm gonna look for within the AM. But this current market structure on a 15-minute chart, I don't like how we have the sell side. I don't like that sell side. And if the market is going to seek this low here, then I don't think that the market is going to leave this low intact. Therefore, we have no inefficiency in here to be targeted. So that means that we only have these ones here on a 15M. So if the market truly wants to go below, and I'm completely wrong within my explosive movement to the upside, that is going to be proven with this inversion, this BC turning into an inversion gap, if it wants to do that. Market going below the sell side, but first consequent encouragement of this sell. This bullish order blocks mean threshold, using it as a means of resistance on a lower time frame chart, and then price being sent below this. This consequent encouragement, if we go below this, then we're going to go below this, and then eventually this. And this can be also based on the run above this buy side. So I'm currently in between directions. I want to see what price. I require more information currently. But look at how non-opinionated the chart seems without everything that I've had on it. Look at how opinionated it seems right now. So we're currently trading right at the Sunday's opening price, which is the opening price for the weekly candle. So the market, it looks something. This is the opening. We went down, high, and we're currently trading here. This is how the market looks currently on a weekly perspective. This is why I always say that it's important to have this Sunday's opening price. I'm looking at the 50% of this wick, see how we treat it on a bullish perspective, to see if this run below this lows is treated as a means of sell side being taken, the market rallying higher. If not, then the upper quadrant of this BC would be just used as a means of resistance, and this would be an immediate rebalance here, which would send price lower at speed below this low. Let me just go into 1M to see the business. I would not short anything with these highs in place like this, but I'm looking at this here. I'm gonna make it white. Level of sell side. Bullish shorter block. Sell side level being hit. Let's see what the market does now. Beautiful retracement. It's at the S&P 2. Opening range gap is now settled. So let me just take this line. Can I do this? $9.30. Opening range gap high. Opening range gap low. Let's see if the market treats this down close candle as a bullish order block. But normally I don't look at anything right now as a means of, I mean, if I was alone and I was not live streaming and trading, I would not even look at a 1 minute chart now. I would just wait for the macro between 950 and 1010 to see what the market wants to do. So I would not try and frame anything from 930, but we got a run on sell side. We're trading at that 15-minute fair value gap low. So let's see if the market wants to move higher. I'm looking at the constant encroachment of this wick. Right here. This wick. 50%, see if the market wants to go higher. And then this would represent a level of buy side. But let's see how we trade into this order block here. I would want to see the market close above the mean threshold of it, which is at 50%, in a bullish perspective. But if this situation was here, and I would have to decide whether to take a trade in it or not, my model implies that I need to see the macro between 950 and 1010 or 1050 1110. So this here, even if this is exactly my model and this is absolutely a beautiful run into those levels that I expect, I would not take it. Because even if I win, this would not satisfy me. Let's see if the market would want to create a fair value gap here, or to come back into this existing one, creating an immediate rebalance. See, I told you, like, I wanted to see the market close above that bearish order block mean threshold if we're going to go to the upside, right? Let's see. 50%. Market never closed above it. This is the importance of signatures in price. I'm just going to wait patiently on a 15-minute chart for the 950 1010. And while we're at it, let me just go to the bathroom. Alright, so remember I told you, I mean, I don't want to get any opinionated now again, but I told you that if we're going to trade below these lows, that the market is going to use this BSC, this green fair value gap, as a means of inversion. This is what I'm trying to look at right now, whether the market is trying to create a swing high here, a swing low into this current BC, or if it closes below it on a 15-minute basis, then what the market is trying to do. But I'm also looking at the down close candle that is before this movement. And within that idea, I also look at the opening range gap high and the opening range gap low, the 75% level, which is the upper quadrant, the constant encroachment, which is the 50%, and the lower quadrant. These are the levels I'm looking at. Now I'm not gonna add them into my chart because it is already overpopulated. Let me look at a 4-hour. Closed above that Reaper one time, came back into it, closed above its upper quadrant. Let's see where this 4-hour candle closes. And if it closes like this, and if we maintain our bullish perspective, then I would want to see the next 4-hour candle, which is from 10 o'clock to 14, to come back into the constant encroachment of this tail that is currently forming. And if this is a small range, which means that this body remains small, we have another relatively small range. This will turn into a big range. But notice that we're also trading after big ranges yesterday. So we had a big range in London. We had a big range on Thursday on pre-market. We have a big range on the AM session. And then we had a big retracement. Consolidated during the London session. Went a little bit higher. Market went below for the pre-market. So now let's see if the market wants to close within the range with a down close on a weekly chart, which means that this current candle would be down close. But based on how we rejected this, I would like to see the market expand into this level first, and this level second. Let me just look at something. So for the -1 standard deviation, if we hit that and we close above it, then I would like to see the level of 18,437.8, and then above for that 18,501.5, 501.5. So let's see what the market wants to do. 1 minute chart. Level of sell side being taken again. Let me just mark that out. Not this line. Let me put this. What I'm looking at is this very shorter block. I want to see it being used as voice crack, as a means of inversion if we're trying to go higher. So we closed above it, created a sort of immediate balance here. Market traded below this low once again. See if the market wants to trade above this, or it's just going to stay within this range. And if I have that opinion that the market is going to go into the constant equation of the tail, then I have to wait. I have to wait for the market to reach that 10 o'clock time to see that, which I'm expecting. See, like, this is very complicated. But it's worth it. And it's fun. Let's see. Let's see what the next 2 minutes of price action do. They're gonna be influential for how the market is going to continue delivering. I'm looking at that volume balance, see if the market wants to trade above it. Consequent encouragement of the wick of the order block or the opening price. Let's see if the market wants to take on this low. 25% of the wick on a 15-minute chart. Bullish short block opening price. Plus OB. Let's see if the market wants to trade above this. Very short block with speed. Yes. Okay. Let's see if the market wants to trade above this. Very short block with speed. Volume balance, I'm looking at this. We closed above it. That can be a sign of strength for our current idea. Let's mark it out. Therefore, this would be left open. If you're strong to the upside for this level of buy side, this level of buy side. If the market wants to indeed reprice above these levels. And let me look at the opening range while we're at it. But I'm very closely analyzing this because I don't want you to take any trade. We went only into the 25%. Look at that. See if the market would still want to close above this. I want to see the market close above the consequent encouragement of this wick now. If you're trying to go above. And then climb up above this rejection block. Here and up above this high and the consequent encouragement of this. What we're also looking at is this fair value gap here. So all we did was we traded at the upper quadrant of it. We are now rallying off the upper quadrant. We're keying off the upper quadrant. The market closed above the consequent encouragement or right at it. Let me just see. We closed right above the consequent encouragement. Market went a little bit below, allowing the smart money to accumulate positions here. Consequent encouragement. I mean, this is what I studied. Fair value gap. I would want to see the price now run above this with speed, above these levels of buy stops. Let's see if the market will leave this open or some portion of this open. I would never want to see price here into this. Let me just put this. So big. And this fair value gap is going to be influential for the rest of the day because this is the first fair value gap that forms. Let me just do this while we're at it. 930 plus BC. I'm going to extend right. I'm also looking at this here and this fair value gap in which we're currently trading in. I would only look at the 75% of this wick now, of this tail here. This candle can remain down closed. Next one can open and spool higher and rage higher above this buy side and close above this level of this important level of buy side that we've took during this. So I believe that these highs are going to be attacked. $9.50, let's see what the market wants to do. I would want to see closures and the market spooling above this 50% of this wick. I don't want to see a swing high being formed here. Let me just write down 930 BC. Because this can be also utilized as a means of inversion later on if we're trading within a shorting idea. Let's see what the market does in the next candle right here. I would want to see it go high with speed now. I don't want to see it stagnate in this price range. I like that we closed above that level of buy side, but I would love to see this now rage higher. And no, I have no trades open right now, so not on my MT4, not on nothing. I'm just reading price. I like how we closed above that constant encroachment of the wick. We can use it as a means of support now. This 50% of this wick. You can use it as a support and then send price higher. And if the market chooses to retrace from this price point, let me just look at a higher time frame to not get stuck. I don't think that the market is going to top like this with its current highs in place. So I still believe that this buy side is going to be attacked based on the fact that we took the 830 buy side. the 830 sell side. This would be the opposing liquidity pool. And I believe that this liquidity pool was just taken for accumulation of longs purposes. Beautiful how we use that. Consequent encroachment of the wick. I'm looking at the consequent encroachment of this sell now, and at the 50% of this wick as well. But on a 15, also look at the 50% of this level here. We traded up until the upper quadrant, but I would like for the market to take this now. And for further levels, okay, for 1.5, I'm looking at this 0.775. 0.4. That is our buy side. Okay. %25 BT. %50 BT. 75% BT. So beautiful. Told you that the market is going to close above this. If we do, then we want to see the closures above this consequent encroachment of this wick being utilized as a means of support. We did that. Market never went below this wick. Market left a portion of this open exactly like I told you it's going to do. And then we went on into this buy side. Now this can be absolutely it, but I believe that we're going to continue higher now up until the levels. We have an immediate rebalance currently. See if the market wants to continue higher from here or go lower. But normally in a trade, like let's just say you longed that busy. Normally in a trade, you can absolutely be concerned with this level, and that would be it for the trade. But also amazing how I told you here in the 945 candle that like right here in the 943, the next two candles are going to be influential on how we're going to trade. If we're going to trade above or below. Immediate rebalance stays, therefore the next 2 or 3 candles should spool up with speed, closing above this 25%. Look at how we went right into it. I would like to see this candle go higher into this level now. Okay, this plus IFG. Volume balance, we closed above it. I told you we're going to use it as a means of support. Market also used this inversion gap here. Never traded to this bullish order block, which is a propulsion block. We also left this open, like I told you, is going to leave it. So this propulsion block, if the market would have went into the 50%, that would not be a good sign for a bullish movement. Looking at the current price action, I would love to see the market. I would like to see the market trade higher with speed now. Due to this, what was that? This also institutional order flow into drill. Beautiful signature here. I would like to see the market trade above this. Here, this high. But essentially, this is, and also look at how we are trading around this level. Let's go back into 15. And let's see the market just pull higher with speed now. I don't want to see big retracements during the next 15-minute candle, so I'm looking at that BISI that we're currently trading in. Consequent encouragement of that wick. 9:59. We have 1 minute left, and it's gonna be 10. Let's peek at the 4-hour. And I believe the market is just going to spool even higher. But don't take this as trading advice. And do not trade this movement with live money. And if we don't, and I'm completely wrong, I don't care. Ten o'clock. Closing and opening above this. Here, creating a high. I'm looking at this bullish order block here, the opening. Here, the 50%. And we also closed above this 25% BT. We can use it as a means of support. BT stands for between targets. So what I did was I took this buy side and my next target, and I put quadrant levels 25, 50, 75. What I'm gonna do is I'm gonna go into 15M. I'm gonna do this. $18,350. 350. We have this BISI here. I mean, for a bullish run, I would not like to see the market come back into that, and I don't believe that it's likely to come back into this. But let's see. So this can also be a level to look for, but I'm looking at this BISI. Again, I would love to see the market, and I would want to see the market trade above this consequent encouragement of this wick, close above it to send price higher into this 75% BT. There's your 50% BT. See if the market wants to close above this now. Look at how the market respected it again. Let's see if this candle wants to go straight to the 75% right now. 50% of this wick. Here. Market can also come back into it or take these lows. Because I'm also looking at the market from a seconds perspective. This would be perhaps a relevant sell side pull. I'm trying to be aware of everything, like all the time frames. This is what I'm internalizing as a means of price action. And look at how taking partials at the 25% BT or 50% BT, like let's just say the market just reverses from this price point. Look at how we would be absolutely precise. Even if we took a trade from only that BISI up until this point, and then we would have closed it at a 50% BT. I would be content with that. And this is how I sometimes manage to predict highs. Using standard deviations. I'm telling you everything. I told you I'm going to document everything. Like using standard deviations along with these levels. This is how I traded since the start of the year, and these quadrant levels and these between target levels and these standard deviations, these help me tremendously within my higher time frame bias, within my lower time frame bias, within everything. But these are just levels to aim for after you have you're one-sided on one narrative and one bias. these levels do not mean absolutely anything without a bias first and a narrative. So these levels can, I want to see the price expand higher with speed from here, by the way. These levels do not mean anything if you do not have a bias made, and that bias is made high probability or high probability based on your experience, and that is the part which sucks, because experience cannot be bought. You have to go through it, and it is not even about the experience in itself that hurts, because if that was the only thing that would have been hard at trading, that would be so easy. But it is about all the things. It is about all the other things that are outside of the chart. Like, you're learning how to trade, but you're trying to rush it because something else in your life is wrong. That is essentially what I'm trying to say. Let's see if the market wants to spool higher with speed here. Told you that the market is going to go above that. I love how we opened with the volume imbalance 2 times here. But essentially what I was trying to say is that a big impediment when it came to my development as a trader, and perhaps a way in which I could have sped up my quote-unquote process, quote-unquote sped up, because I'm not trying to speed up things, was trying to do it faster. Look at how we're trading above and within these levels, by the way. But trying to do it faster because of my lifestyle, of my other life circumstances. So it was not even about the charts. So that is the hard part. I love how we closed above that. That is beautiful. Beautiful. So basically, what I want you to understand from my experience, because everything that I'm talking about here is my experience. I'm not trying to teach you something, really. I'm just talking about everything that I've did. Is everything you saw within this live stream. There's your 75% BT. Everything you saw during this live stream. All the predictions that I've made, candle by candle. You saw this absolutely live. Every single thing that I do is based on daily study, on not rushing things. I don't care about the lifestyle circumstances. I see everything that happens within my life. I see that as a means of a challenge that is sent from somebody higher. I don't know who you believe in. I don't know if you believe in something. But I believe that every single challenge that is sent onto me, that is sent by God, and that is sent for me. And we're going to take a screenshot when the market goes into that level that I've told you about. But basically, what I wanted to emphasize during this beautiful prediction that we did within the live stream, candle by candle, from this 9:45, I told you beforehand, before the market opened, that I want to see the price spool higher between 9:50 and 10:10. I don't want to look at the 9:30 opening. We did not. Because if we were to frame along here, the market would have crushed us, and then we would be scared to get in a long. The market framed a long position, and then we would just miss it because we framed it long. So you see now the importance of respecting your model. Let me just do this quickly. 32, shade of black. All right. And yeah, just I was talking about, and by the way, did you guys saw how we just closed above this? We never closed below it. Market closed in between these. I told you here, the market is going to go above with speed. I told you that this opening, this was significant because we had twice volume balance openings. Therefore, this is what I've studied. This is a signature in price that signifies speed. Market indeed went with speed, and we went into this 75% BTC. We were very close to that target. But why did I say here? Why did I say that the market is going to go high with speed? Let me just spill the sauce. Because within the current narrative, I told you that narrative is everything. This down close candle that we had here, all I ever saw this as was just a future bullish order block. So let me say this again. I saw this within this candle, which was trading. I saw this as a future bullish order block. So in order for this to become a bullish order block, the market would have to close and trade, not close, but rather trade above this high here. So therefore, if I know that I have a high degree of probability that the market is going to go for this 18401.5, then I would want to see closures and signatures at the 50% of this, even if we did not make the order block yet. And this is everything. This is what happened. We opened with the volume balance here. See, this signature right here, this is what I study. Nobody has ever taught me this. This is what I studied on my own. This is what I'm sharing with you for free on this live stream. And that perhaps nobody watches yet. But when I'm going to have millions of followers, you're going to watch this back and say, oh, wow, this is so significant. This is significant now. Just because people do not follow me yet doesn't mean that this is not valuable. I just want you to know this, by the way. I also told you about this 50% of this. And this is this is funny. But I'm going to take a screenshot here. And this is going to be it. Let me just wait for a couple more minutes. Let me just make a recording for my Insta. Alright. And I'm gonna close this session here, but hopefully you learned something. Hopefully I was clear on everything that I wanted to say. And I'll see you in the next live stream, guys.